Hello again, John Flynn from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region, here once again to give you my honest and professional opinion regarding the 2022 Canadian housing market. First, I'd like to share this graph. This is ticker symbol SRS, Pro Shares Ultra Short Real Estate. So you can see people are shorting the real estate market in the States, the REITs on the stock market, and it looks like it's gone up pretty significantly in the last few days. So even the stock market is a reflection of the declining prices, especially stateside. And by the way, I'm not promoting stock trading of any kind. This is just something I noticed, and it is a reflection of the overall real estate market. If you look at historical charts, if you look at this one actually back, after 2008, it was some pretty big numbers. It was up, which means real estate was down. And if you want to lose more money than buying high and selling low in real estate, then you should buy high and sell low in the stock market. So yeah, I did just drive across the country for my vacation. I took about 2.5 weeks to do it. It's a pretty big country, pretty great country, by the way. And as I went along and stopped in little places, in whether it's Manitoba, Saskatchewan, Alberta, Edmonton, Alberta especially, I did check out, the listings. Not like I can't check them, when I'm at home here, but when you're on the road and you're in the places, it's more interesting. You can see what's surrounding them. And yeah, it kind of hit home that everything was and is still overpriced. And I related it back to my own city and thought, what could I get for $500 or $550 or whatever the case may be, 3-4 years ago, even 3 years ago in my city, and I would have got, a new house for however many square feet. And they're selling in smaller places like in Saskatoon and, outside of Edmonton. I forget the name, it's northeast of Edmonton. And I'm thinking, like, these places are small, they're hard to get to, they're in the middle of nowhere, especially like Saskatoon and other places like that. And again, not bashing these places, beautiful places. But again, comparing them to places in Ontario closer to GTA and the one of the top markets in Canada, these places are overpriced in my opinion. So anyway, now I'm going to get into that a little further to kind of put it in perspective. And I've touched on this in previous videos, and I wanted to revisit it. And it's the household income to the average house price in Canada, and just that ratio and how out of whack it is. So let's take a look at some numbers and see where it's at. So here's a graph. Global News published this, but it is from Korea, and it shows you historically back to the 1980s or so, and it reads, it takes how many times the average household income to buy an average home, and this is for all of Canada. And you can see it's been between 2.5 to 3.5 times up until about 2008 or just pre-2008. And of course, it started to creep up. And I remember news reports coming out saying once it was at 4 times, and now again, that was after 2008. So this is 2010. You can see even on this graph, they said once it gets to 5 times, it's unsustainable. Well, we went like to 10 times, which is crazy. Like, that was in the February this year when it would have been over 10 times the average household income, when historically you can look at 2.5 to 3.5 times. I tell people this all the time. So fundamentally, houses are not affordable or overpriced or whatever you want to call them. So now in 2022, this place in Chardonnay, I think that's how you say it, they did their own study, or they got their own data. And again, it's hard to find, but these guys seem to have some pretty good data, and I've seen other websites and sources referencing these guys. So this is the average income in Canada. Does your salary measure up? So let's look. So here is the average household in Canada, or the average household income for 2022. And for the year, it's $75,452. Now, they don't include in these numbers if this is pre-tax or after-tax data, but we're going to use what they have. I looked everywhere in the article, and it makes no mention of it. So I'm going to assume it's after-tax, but let's just use it regardless. So it's $75,000 a year for the average household. Now, this is not per person, this is per house, or just under $6,300 a month. And of course, if we look at the average house price, we have to compare that to the average house price, We're not going to compare it to February. We're going to compare it to today's numbers, which was 637 for the most recent data we have, and that was in August. So an average house of $637,000 with the average household income of $75,000 per year. And of course, let's get some numbers on the mortgage. $3,700, just under $3,800 a month. Now that includes a 10% down payment, which is a pretty good down payment, a 5.25% 5-year fixed mortgage rate, which is the norm now, and it does include property tax of $250 per month. So just kind of like your average house and your average taxes. No heating included in this, but we'll touch on that now and again in a second. So back to the graph. Right now, based on this data, based on the 637,000 compared with the 75,000, our house prices are 8.5 times the average household income. So way above the historic norm and way above sustainable levels. And if you look at the monthly is pretty insane. 60% of your income goes towards your mortgage, so principal, interest, and of course, your property tax. Doesn't include heat, which you should use in your TDS and your GDS ratios, and your GDS especially, that's gross debt service. But it's 60% of the average household income, which is just under $6,300, which is pretty insane. So, and of course, that we're not even taking into consideration inflation for other things like food and whatnot. So pretty unsustainable levels here, just looking at those numbers. And before, we had those numbers even lower for the household income, which I think it was around 66,000. I think that was after tax, but again, we're not going to even touch on tax, so these numbers could be higher or lower depending on how this was calculated. So to put that number, that monthly number of 60% of a household's income would have to go towards a mortgage, and that's after you've saved up your down payment, and that doesn't include your heat either. And you can see here, this is Royal Bank. Know how much home you can afford, and this is right from the RBC website. And of course, we're talking about the GDS and the TDS. So the first one they do is the gross debt service ratio. No more than 30 to 32% of your gross annual income should go to mortgage expenses, such as principal, interest, property taxes, heating costs, and condo fees. So what this data tells me is the average household in Canada, and this, again, this is not something that we don't know, but it just reaffirms it and it gives you a number. The average household in Canada cannot afford the average house unless you already own one, you've been in the market, but of course you're not buying now. But if you want to buy now and you're the average household, you can't afford a house. Your ratios are off by double, or they need to double. Your income needs to double for you to be able to afford the average home. So it's pretty crazy. So if we double your income, you need to earn $150,000 just for the average home. So anyone that argues that, this is the bottom of the prices, are not going to go down, they don't make any more real estate, we have too many immigrants. Fundamentally, it just doesn't make sense. You can't run a country like this. So one of the comments this week, I think, mentioned immigration or something, but my response was, instead of printing money like they've been doing, they're importing people or printing people, right? Because that is like kicking the can down the road. You increase immigration, and of course, that's kind of like a stimulus to the economy. And of course, some of those people will buy the overpriced homes and will keep certain markets going. But again, that's a temporary solution. It's just another thing, and it's a creative way, but it's not the right way. The right way, obviously, is to have good, sound monetary policy with good paying jobs and whatnot. But right now, we obviously don't have the right policies. So the last thing I wanted to talk about today was, I'm not going to go into stats today, like the market stats, because we're almost at the end of the month. And of course, I want to wait for the full September stats to come out so we can touch on that and see how the market's been doing. And I don't think it's been a very bad month at all. Again, from a seller's point of view, the sales seem to be steady. The prices, they haven't really gone up or down too much. So it's been a very consistent month. And of course, we'll see what happens in the winter. But one thing I did want to talk about was working in this market. So I much prefer working in this market than I did, in February and January this year, where it was just like a free-for-all, sellers get whatever they want, and you have people lining up to buy homes. Because it was a one-sided market. You couldn't work with existing sellers to buy their next house because they'd be taking risks, and it was a very aggressive risk-taking market. Now, a lot of my clients, it's back to the good old days, I call it, where somebody says, you know what, I want to move. I have a townhouse or whatever. I'd like a detached. And we go out and we look at homes and we say, yeah, you know what? I like this home, or I think this is an option. I can move. It's going to cost me X number of dollars more on a mortgage. Of course, interest rates are high, so it creates a little bit of a hurdle for some people. But they can take their time. They can go out. They can put an offer on a house, conditional upon selling theirs or whatever, and breathe and make the right decision. Now, of course, I still don't like that first-time buyers can barely afford to enter the market unless they have a really good income or whatever the case may be, or a good down payment. But generally, it's a lot better than it was because it makes sense. People can actually go out and buy and sell a house. Again, people are in the market. Not ideal by any means, not the perfect market, but at least we're heading in the right direction. And it's kind of nice that I can call up these people, because people would call me and say, I want to move. And I say, well, you got to sell your house, or you got to put an offer on a house and take risks, right? There's less risk needed. Although, like I said, prices are still elevated and I'm not a big fan of it, but they're going in the right direction. And I think that, given my forecasts in the future, we will be able to help out those first-time buyers buying their first home. And I can't wait. That's probably one of the most fulfilling things in my job, is when that young family, they've saved up their money, or the young couple, whoever it may be, maybe it's a single person too, and we go out and we buy the house, we're looking at houses, and of course it's the offer process. It's like a stepping stone process, right? This is the first house they've seen. Okay, they've got over that hurdle. Next, this was the first offer I put in. Maybe it didn't work out, maybe it did, and then they get the accepted offer. But working with them and being there to share my knowledge and experience, and knowing that they're comfortable, because we're being honest with them and we're telling them. I tell people all the time, this isn't the right house for you. Like, they love it. I love the house and this is perfect. And I say, well, this and this and this reason is I don't like it, and personally I wouldn't buy this house. I'd prefer this house for you. So again, I miss those days. That would complete the circle for me to make it a kind of a perfect market. But right now, at least, it is back to those end users, not just people wanting to increase their portfolio like the stock market we talked about in the beginning. It's actually people living in homes again and buying homes to make that move because they need more space or less space or whatever. So I just wanted to share that with you. Kind of like the fundamentals on the ground of what's happening now, right? Less investors, more end users, more families, more normal transactions, in my opinion. Again, thanks for watching. Thanks for commenting. I do read most, if not all, of the comments. I've been away, so it was a little tough. I did miss some. But yeah, comment, share, like as always. And until next week, I'll see you then.